We're back again.
Again, yes.
You're across the table from me this time. It's different.
It is different. We usually sit kind of like side by side.
Yeah, we're kind of you're my wingman. Now
I know.
You're way over there now. I feel
know.
like we're detached a little bit.
A little bit.
Maybe we've become adversaries.
I'm having a little bit of a separation anxiety right now.
A little bit.
A little bit. Yeah.
I'll give you a hug after the podcast.
Okay, right on.
I'm under the impression, this sneaking suspicion I'm having in the back of my mind, that it might be my birthday.
Really?
Yeah, because we're in this heat box of a room down here, and I assume that I'm probably going to end up in my birthday suit by the time this is done.
Yeah.
So, how was your week? You're who? You might as well tell people who you are.
Well, I'm Anthony from Wall Street Breakdown.
I'm Cody from Wall Street Breakdown.
This week I've been really busy. We got a new editing program that we're going to be using for our videos.
We do.
Yes.
We're going to be doing that tomorrow.
So I've been doing a lot of research on how to use these programs. So we got some exciting videos that are going to come up in the future.
Working hard.
Working hard.
Working very hard. There's going to be a website that's going to be going up quite shortly.
That's true, yeah.
We're going to be doing some serious fundamental breakdown videos that are going to be released, but it's going to be members only, sort of a... We're going to have a tree fort.
Yes.
We're going to have a stock market tree fort, a no ma'am, no girls allowed, whatever it happens to be.
Yeah.
But it's going to be a membership thing, but we're going to get to that shortly. That's going to happen in the coming weeks.
That's right.
But we are working on this program that's going to make the videos quite a bit better. I think a lot more entertaining.
Sure.
Why look at me? We can make a fun little avatar with some glasses on instead of looking in my ugly face, right?
So how was your week?
My week was great. We're back at the gym full time.
Oh, I love that.
Hammering it away. Everything feels good. It's beautiful. It's summertime. My kids are outside right now getting a fantastic playhouse built by my father-in-law.
So cool.
It's going to be pretty cool, right? They're going to have a heck of a time. I think it's like 9 or 10 feet tall. It's massive out there.
As he said, he was a king of the fort, your kids.
I'm telling you, right? So, the markets, we're through earnings basically. There was a couple of earnings this week, but
a few of them,
for the most part, it's been a pretty chilling week. Things didn't really move much. It's been pretty laissez-faire, man. I don't know. It's summer. You know what? It's time to kick your feet up on the patio and have yourself a beverage, non-alcoholic preferably, but whatever you're into, I'm not here to judge. So let's get to the markets, and it's probably going to be a fairly casual podcast. Expect maybe a little bit of banter, some jokes. Who knows what there might be? There may be clowns and all sorts of lion tamers stopping by.
So how did the markets close this week? Were they up, down, all around, or what?
Okay, so we're going to talk. I did an Instagram video that actually gives a pretty good insight into where the markets are going, or where they seem to be going this year, or where the money's going. We've been having conversations in the last couple of weeks about the economy being really well and inflows into the marketplace still being fairly robust, right? We're not talking about, there's no money out there, but we're wondering, where is it? We see really good earnings in the Dow, in the Nasdaq, or whatever you want to call it, whatever index or listing exchange you want to talk about.
Yeah.
But we see all these earnings doing really well. But unfortunately, we're not really seeing a lot of pop. There's a little bit of pop. Some companies are having really good runs this year, despite actually having fairly average statistics. Companies like Nike are up year over year, like 30+%, up significantly this year. But like Nike's been struggling. They've been having issues in the public eye because of some internal issues with people that work for them, and just not favorable working conditions. And then on top of that, losing some market share in the footwear industry with Adidas catching up significantly, especially in the United States, losing some share in the athletic brands industry with Lululemon really pushing them. But you see there's growth. So we look at these numbers, and we'll go through the numbers really quick, and then I'll tell you what I'm talking about. So Dow Jones, 24,715, down 0.5% on the week. The S&P 500, 2712, down 0.5% on the week. The Nasdaq, 7354, down 0.7% on the week. And the TSX was 16,162, up a little bit. The TSX getting a little bit of a bump. So we see down, it's very marginal. There wasn't a lot of news this week. There's nothing really moving the markets around. Obviously, we've got this China trade war stuff that's still kind of looming. We've got this Iran thing. The price of oil right now is a big concern to a lot of people. But I think a lot of it is, it's summertime, and there's just not a lot of movement. People's portfolios are really stable. Things aren't really doing anything egregious. Like, I know we're not at the numbers that we were at in January, but as far as those losses that we incurred after the highs in mid-January, we've pared that back considerably, right?
Oh,
So
yeah.
we're talking about absolute highs. So like when you're comparing things to the apps, think of the greatest day you ever had, or the greatest sandwich you ever had, or the greatest sex you ever had, then try to compare everything to that. You're going to be fairly disappointed. But when you're talking about it hovers around that number. I mean, you have to be fairly happy with that. When things are almost perfect, it's pretty good. So we're not near the highs of mid-January. But the money, where is the money? That's the question it all comes down to, is where is this money going? There's money in the market. The economy's doing well, and we talked about this, like I said, in an Instagram video earlier this week. The Russell 2000, which is the bottom 2,000 of the top 5,000 publicly traded companies in the United States. So if you were to buy the Russell 3000, that's the 3,000 top publicly traded companies. So that encompasses all the S&P 500 and the next 2,500 companies that are publicly traded in the U.S. The 2,000 is much smaller cap companies, obviously. We're talking about companies with revenues in the tens of millions of dollars, hundreds of millions of dollars in some cases, but not in the billions at all, right? So we're talking the bottom 2,000 to 5,000, it's up over 5% this year. So while we're talking about the Dow being up, it's a percent, the S&P, it's a percent or something, they're hovering right around there. The Russell, so money is trickling into small cap because I think we saw all these big cap players get such a big run over the last couple of years, and we're really back to par now, where people should be. I know some of the price to earnings are a little overvalued, but I don't think it's so egregious that we're pushing on anything that's an abnormality. We've talked about, I think it might be a new historical type of a data increase where we're allowing the forecasting of EPS growth years into the future, a couple, 3 quarters, 4 quarters further, and we're pricing that in because EPS guidance has always been priced into the share price. Anyways, I think we're just allowing to creep in more on the big cap stocks because they're so transparent. We know what's going on. We see all the marketplaces moving around, all the cogs and everything, and we get all the info. You go down to the small cap stocks, obviously you're not going to get that type of information, but the growth, because the economy is great. You know what I mean? Everything's still doing well. Small business or big business are doing well. So it seems like the Russell 2000 seems to be where the majority of those inflows happen to be going. And on top of that, I would imagine that's where the people are making their most gains at this point. If you're in an index,
right?
If you're in an index, right? Yeah. If you're not picking individual stuff, index-wise, the Russell 2000 way outpacing the major indexes right now as far as 2018 goes. You wonder where the money's going. The economy's doing well. It's just that people have decided that, hey, there's going to be some big players that are going to break out of this. When you're in a boom period and you've got a cycle that may go on who knows how long. I mean, we know the Fed's raising interest rates, but I mean, there's no sign of this stopping anytime soon. We're at like historically low unemployment, what they call like full employment, right? Like that's like a global thing that's going on. We see historical unemployment in Canada. We see historical unemployment numbers in the United Kingdom. 42 years it's been since the UK's had the unemployment number they have right now, 4.2%. So I mean, wow. It's phenomenal out there. It's phenomenal out there. So there's got to be companies in these bottom companies that are gonna run, they're gonna grow, and people have decided, and rightfully so, they're starting to bid those companies up because somebody is going to bubble to the top. It always happens.
Out of all those companies, there has to be a few that rise to the top.
You start somewhere, right? Yeah. A lot of companies don't start with these major backed IPOs where they have rounds and rounds of billion-dollar funding. Right, a lot of these IPOs are just companies that went public to raise some capital, right? They're regional companies, but in the marketplace where the economy is phenomenal across the nation and across the globe, and we're so globally interconnected now, somebody's going to run, and the Russell 2000 seems to be what's running so far for the indexes in 2018. Gold up considerably, $12.91 and 30 cents. Gold getting a big run. Can't say the same for Bitcoin. Down around 8,500 still. It did dip below 8,000. Bitcoin is what it is. I would go gold over Bitcoin. We talked about this. WTI oil, 71.28 a barrel. It's right around the number we had last week. It seems to be where we don't actually know what the answer to oil is, right? I've seen analysts this week. I've seen 2 separate analysts predict oil going to $100 and predict oil going to $50.
Yeah.
You tell me. I don't have. They're professional analysts making probably $500,000 a year. they don't have the answer.
I'm going to guess 75, right in the middle.
Yeah, why not?
I'm an analyst right now. 75.
You basically are an analyst.
Yeah.
We look into this as much as anybody else does, and the fact is there's far too many moving parts that affect this. And when you actually look at the price at retail, and I know this is people's biggest bitch about it, is that they talk about retail and the fact that the price a few years ago per barrel was in the hundreds, and it was roughly the same price at retail now. Justifiably so. 71 now, and the price at retail comparable to 3-4 years ago. But when you actually look at inflation of retail gas prices, from the gas crises in the 70s, the two major gas crises that happened in the United States, Canada, whatever, in the 70s, you actually see the inflation of retail gas is pretty steady. They have more drastic ups and downs, but it's still a fairly steady line with inflation. So you're actually not, you shouldn't maybe tether the price of retail gas to the price per barrel, because the price at retail still seems to be fairly in line with inflation over the past 30 or 35 years.
Yeah.
So, when people get a little antsy about it, I think retail gas is a lot more predicated on the time of year it is. Everybody notices Thursday night, the price of gas changes.
May long weekend,
May long weekend, obviously, right?
Yeah.
So you see all that kind of stuff. So I wouldn't necessarily put the correlation or the blame on the price per barrel or the consortiums out there controlling oil or all the bad trade deals that happen to be out there or anything else that there might be. But the price per barrel and the actual price at the pump, I don't think are as related as people want them to be. Last thing, U.S. 10-year treasuries reached 3.11% yield, the highest since 2011. Most analysts out there don't think that the yield and interest rates increasing are really going to cause the economy to slow down at this point. A 3% yield's not the worst thing in the world, right? That just adds in basically another opportunity for you to diversify a little bit out into something that actually will pay you higher than inflation is. But we're still not looking at anything that's going to really stifle the economy. But the 10-year does continue to rise, and I'm sure a lot of the people in the bond market are keeping their eyes on that kind of stuff. What do we want to talk about in headlines? We have a litany of headlines.
We do.
Things were coming fast and furious all week.
Yes.
There were headlines nonstop. None of it's ridiculous, but some of it does kind of change the landscape of the way things look. I personally would like to start off talking about the sports gambling topic.
That is very interesting, I think.
Or do you want to? No, we want to do economy, don't we? Let's do the economy.
Since we were on the topic
let's
of
do
economy,
the economy, right?
We
did talk about UK unemployment. It's at 4.2%, like I said, a 42-year low. U.S. Treasuries, China sold off $2.5 billion in March of U.S. Treasuries. Obviously, China, the biggest holder of U.S. Treasuries anywhere in the world. It's amid some of the China trade war issues. I don't know what selling it off is going to do. They also decided to increase their holdings by another $9 billion. So even though they sold off $2.5 billion, they increased by another $9 billion, bringing them to $1.1 trillion in U.S. Treasuries, the largest holder of U.S. debt. So sell off a little bit, buy back a whole bunch more. I mean, we're playing a cat and mouse game here at this point. China and the United States are going to come to the table. They're going to come to some sort of agreement. It's this intellectual property thing that's the biggest deal. I don't think China wants to go back into their economy and have to start enforcing on a lot of companies they've been letting get away with things. They've been giving them a lot of leeway. Trump came out earlier this week, said China's been spoiled. They've been spoiled for eternity. They've been allowed to get away with anything. Countries have been helping them. If China's the fastest growing economy to the size that they are in the history of the world, right? Like China has made exponential growth over the last couple of decades. It's about time they just
start playing ball.
You got to even the playing field at some point economically, right? It's a global economy nowadays. We're going to come to some sort of agreement, but right now everybody's bantering back and forth.
Cat and mouse game.
Yeah, it's all sorts of stuff going on, but it's not anything that I think is going to be relevant in the big scheme of things. These guys are really good trade partners. They're each other's biggest trade partners and the biggest trade partners in the world. They're going to get this figured out. NAFTA, we passed a deadline that Speaker of the House Paul Ryan set of May 17th with no NAFTA deal. Trudeau came out, said he thinks a deal could still be done by the end of May, says things look good. I haven't heard anything from a U.S. representative. The Mexico representative came out, said he still thinks things look good, things could be done by the end of May. What do we do? Because Congress is going to be new in January. It's we're now in midterm election season. Congress going away for the summer. There's a reason why Speaker Paul Ryan wanted this in by May 17th and didn't want this to drag into the summer break. I don't know what they're going to do. I don't see Donald Trump or anybody else forcing Congress back into session to make a NAFTA agreement get done. NAFTA could have got done already. We might see NAFTA kind of hang in limbo for at least until maybe a new Congress is elected. And who knows what that could end up entailing, because, I mean, we've heard that the Democrats were expecting to win, but now we're hearing a little bit of rumblings that it looks like there's a lot of Republican favoritism out there. And I think the big tipping point is going to be that in the Farm Belt, there's a lot of farmers that have a lot of problems with this China trade war issue, just because that's some of their biggest trade partners. That's what adds to the price of their futures, right? So the issue is a lot of those states were won by Trump originally, and now because of this, you could get a lot of blowback from those states, from the farmers predominantly. But if there comes a solution to that, let's say in the next month or so, well before the elections in the fall, I don't think we're really going to see too much issue with the Republicans winning. I mean, me personally, I don't see how you could put Democrats in power when Democrats have really gone out of their way to kind of stifle any kind of progress the Republicans have been trying to make in power. And the Republicans have been doing it phenomenally. Like, don't you love I love the upfront behavior that our president has, or that the United States president has. I love the abruptness of the tweets, and he just goes from agenda to agenda to agenda. He doesn't care about stepping on toes or hurting feelings. It's about progress. He's there to make moves. He's not there to sit idly by or to go meet with people from other countries and have coffee and play golf. It just, when he's on the job, that guy's on the job, and he is not scared to ruffle some feathers. So we'll see. We're hearing Japan apparently wants to add some tariffs to the United States. $409 million of proposed tariffs on exports from the U.S. The reason is because out of all the U.S.'s major allies out in the world, trading allies, Japan's the only one that wasn't offered any kind of leeway on the steel and aluminum tariffs. So I guess Japan's a little bit
bitter about that.
A little bit, right? And rightfully so. Sure. Rightfully so. Japan probably should be in on that. The EU's in on it. Canada, Mexico, Australia, South Korea. A bunch of other people are getting the benefit of the doubt because they're strong trading partners that play by the rules. Japan plays by the rules. So, is maybe the issue that some of Japan's trading with China, because Japan does do a lot of trading with China, is the concern that Japan is then going to slip in and start trading a lot of that technology to China and kind of let it go, as opposed to what the U.S. is doing, where they're not letting it go. So I don't know. We'll see, but Japan threatening some tariffs on some U.S. exports. Moving on to jobless claims. Initial claims up 11,000 to 222,000, still very low. Continuous claims down significantly, down 87,000 to 1.707 million. Inflation coming out of the Atlanta Fed for May was 2%. They were expecting, it was 2.3% prior. They're expecting it to be around this number. This is that number that we're looking for continuously for rates to continue to go up. And I know we don't want to hear that, but we've been historically low for so long. Rates are going to go up. Plaus in Canada is going to do it. Powell in the U.S. is going to do it. The rates are going to continue to go up. I know we heard the U.S., the St. Louis Fed chair said this week that he doesn't think that they should rush the rates. They really need to be paced and think it through and see how the market's doing and act accordingly, and not have a schedule, not a future schedule where we've got this timeline that we're expecting to fulfill, a raised rate in September, a raised rate in December. You need to be able to take it step by step and take each little bit of incremental information and break that down and make it into the overall look of where things are, and then make your decision. So the St. Louis Fed chair giving his own opinion, and very, very respected. This is not a Fed chairman that's looked at as a newbie. This is a guy that I think
seasoned veteran.
This is who Jerome Powell would probably listen to, I would imagine, as a shoulder to lean on when making decisions in his first year as the Secretary of the Fed, right? So industrial production up 0.7% versus a 0.6% estimate. So industrial production continues to rise. Housing starts, obviously, this stuff's going to be way off because we know interest rates are going up. We've been through that bit of a housing cycle already. Builders are doing really well. Margins are good. All that kind of stuff is working well. The cost of everything is going up. The cost of lumber, cost of everything, cost of lumber.
Yeah, 30%.
Right?
Right?
30% increase year to date, right? So things are going up, or this year 30%, 60% year to date. Yeah. So things are in the housing market. You might want to pump your brakes on all levels of the housing market. Housing starts in April down 3.7%. MBA mortgage applications, the composite index down 2.7%. Purchase index down 2%. Refinance obviously down 4%, and the 30-year dropped like 1 basis point, 4.77% from 4.78%, but still it's getting expensive. People aren't refinancing. People aren't purchasing as much. Housing starts are down. I mean, it's all relatively expected, right? We've kind of reached that where the lending is going to start to get. And remember, we're talking about numbers down from top numbers. We're not talking about they're down and they're in the dumps. We're talking about 6 months ago. These numbers were at their top. They were growing every week. So we're seeing them start to come down. But we're not seeing them absolutely bottom down.
Yeah, they're not falling.
But definitely when you look at that part of the cycle, you can tell that part of the cycle, because of the interest rate rise, is starting to be, it's plateaued and it's on the downside of the cycle. So keep an eye on doing any kind of purchasing in the home builders, even an eye on Home Depot or anybody else with the cost of things going up. It just starts to erode your margins a little bit. And that can be really hard to keep up with as margins erode in multiple categories, potentially at one time. So companies have a tough time sometimes adjusting on the fly. So keep an eye on that stuff. April retail sales, as retail continues to go up 0.3%. Ex-auto's up 0.3%, but that was a 0.5% estimate, so that missed by a little bit. That's the economy.
That is. Now we can move on to some headlines.
I'm going to have a drink of water. The economy is doing pretty good. Don't let some of the mortgage stuff and housing starts get you spooked.
Yeah, don't get startled by that. Things are okay.
We talked about loans, right? Like we were talking about that a little earlier when we were prepping this, was that, and they're concerned about obviously delinquencies across the board, but there's delinquencies in the subprime auto loans. And it's not so much that we're concerned about people being delinquent in the economy the way it stands, because jobs are so aplenty right now, but you do have to watch that bottom end, because it's a matter of that first couple dominoes falling that's the real big deal. So subprime auto loans, highest default rate since 1996. Loans more than 60 days past due reach 5.8%. So you look at that and you go, okay, that's really starting to grow. That's a high number now. We're starting to actually see some serious delinquency rates. You're probably going to see that with credit cards and all that. And these subprime auto loans, much like mortgages, people I'm sure are familiar with the term subprime mortgage. These are bundled into investments that are purchased. Now, when you look at this number, you see it increasing. But the inflows into the subprime auto market where people are making investments, it was $9.5 billion last year, and it's on pace for $9.5 billion this year. So the inflows are the same. So people are still thinking this is a solid investment, even though these numbers are creeping. But lenders, since January, in the year since from January to January, have actually decreased their lending of subprime loans by 10%. So while we see the increase of 5.8% in delinquency rates, the lenders are out in front of themselves this time, as opposed to maybe in the past, where they're making sure that they're curtailing any kind of problems before they get started.
Yeah,
I think that's
a danger zone.
Yeah, because you know there's going to be some bad apples in there. You just got to plan for them.
Yeah, exactly.
You just got to plan for
that.
Exactly. You just got to see that coming and adjust accordingly. Xerox has decided to step out of their pursuit to purchase Fujifilm. They've reached a settlement agreement with Carl Icahn and Darwin Deason. Activist investors obviously came in and took over the board of directors. CEO Jeff Jacobson's out. He stepped down. John Visentin, who's been working with the activist investors, is the new CEO. Xerox apparently could be sold off to a competitor or some private equity. Fujifilm stock wasn't hurt by this at all. What does Xerox do? Does anybody... They make printers and copiers still?
I'm pretty sure so, yeah.
That's about it, right? They're going to sell these...
Maybe ink cartridges too,
so,
for sure.
like, activists stepped in, and I mean, like, you got Icahn and Decent in there. These are big heavyweights, right? These guys are swinging big stuff. So it's it's clearly they're giving it a cosign. They must like something about it, and they obviously didn't like something about the Fujifilm deal, so they got out of that. But they're gonna streamline this company, I imagine, by shredding off a whole bunch of things and selling it for parts. That's probably what's going to go on. They're not going to keep running this company. It's going to get taken over by someone. So ZTE. Let's talk about ZTE. So this is a cell phone company out of China, and they get a lot of their components for their cell phones from the United States.
Yes.
Now, there's been some trading sanctions with Iran, and ZTE was selling cell phones into Iran illegally.
Naughty.
And because they've got U.S. components, ZTE, which is a major company out of China, major cell phone manufacturer, right? Xiaomi, ZTE, and Huawei are the big ones. Obviously, Huawei quite a bit bigger than everybody else. But ZTE's now been banned from getting any U.S. components. Even Trump came out and said he was going to try to do something about maybe not lifting the ban, but amending it just to help the amount of employees that are losing jobs over in China from ZTE, because this puts a lot of people in limbo. I know Samsung and a couple other companies have touched base with potentially being component suppliers to ZTE in the future. It's a bit of a mess, and it's right in the middle of this trade war thing, but they were doing something they weren't supposed to be doing.
That's right, yeah.
So they've got a ban. That's kind of the way it is, I think.
Well, it's on their shoulders, right? They're the ones that did them to themselves. They should not have been selling products. Right?
But kudos to Trump for knowing that you're in the middle of this geopolitical economic struggle with China.
Yeah, that's a good way of putting it.
And when a company of theirs needs some help despite breaking sanctions, he offers an olive branch. At least verbally, he says that he wants to see this through and try to help them find some sort of a resolution. You know, like, I guess a slap on the wrist might not be the worst thing in the world.
No, it wouldn't be.
Yeah, maybe, right? Maybe that they've learned, I would imagine right now that it's probably time to play ball. And the best thing maybe to do would be to, maybe ease up a bit and let them have the one mulligan.
Exactly, yes.
Blockchain technology. We talk about blockchain. I covered this topic on Instagram earlier this week. Blockchain's getting huge. I don't care what you talk about Bitcoin. That doesn't matter. The blockchain and the ability to shore up a bunch of contracts and the ability to close off accounts around the world all at one time and have everything nice and into one easy to use streamlined process. Something that doesn't take the Swiss accounting process. It's a nice streamlined way of doing things. Obviously going to be implemented throughout all of technology, I imagine, sending information from place to place. And we've got one of our first examples of an actual major transaction.
This is interesting.
Using blockchain technology. HSBC made the world's first blockchain finance transaction with ING to handle a letter of credit for Cargill. Now, this letter of credit, the document backed a shipment of soybeans going from Argentina to Malaysia. Now, usually these transactions, to shore up the transaction, takes 5 to 10 days to have all the papers and contracts and everything move around to the proper parcels. This reduced it to 24 hours.
Booyah!
So talk about expediency and blockchain technology being implemented. We're talking about the absolute infancy of the implementation of blockchain technology.
Right.
It is not robust and out there and fully implemented. We haven't seen people flesh this out at all.
No,
so imagine when people actually get their hands in the dough and get a chance to see where this
How
can
it
go.
evolves.
We took a 5 to 10 day transaction down to 24 hours with one new advent of technology. Where could this technology go in what avenues in a very short period of time in the near future, right? The blockchain technology used in this transaction was created by a company called R3 Consortium. So there you go for that information. The Pentagon, they've got a cloud contract out there, $1.63 billion this contract's for. The contract's going to run until 2023. The Pentagon only wants one provider.
There can be only one.
There can be only one.
Exactly.
This is like the Highlander. I actually think maybe Bezos and then these other guys might have to have like a sword fight.
I would definitely watch that.
Bezos is yoked.
Yes.
Have you seen him? He was a skinny little boy in the 90s, and he found that TRT and got yoked.
Yoked?
Yeah. So this contract, one provider, Amazon, obviously the likely one, Amazon's web service, well in the lead as far as market share when it comes to cloud computing. Oracle, Microsoft, IBM, all pushing for multiple providers to be used, but the Department of Defense has come out and says they don't want to use multiple providers because of the potential for info to be hacked. If it's in too many places, the possibility of it being stolen or misplaced or lost or left open or whatever it happens to be, however the information is taken or compromised, they're worried about that. They figure if they're using just one provider, they can work in accordance with that provider and make sure everything is as streamlined as is humanly possible. So that's probably it's probably hurting Oracle and Microsoft a little bit because they'd like to get this contract, and there's nothing saying they're not going to get it. Just the majority of the consensus out there is that Amazon, being the biggest, is most likely to get it. But we also know that the government, the president at least, has been having some issues with Amazon on the USPS side, and we've talked about that. And they're planning on raising rates on Amazon and other shippers that potentially double from the USPS. So you take that for what it's worth. Amazon could get the contract, but I would not rule out some
Microsoft
of these,
or Oracle,
premium companies like Microsoft, Oracle, or IBM.
Yeah, Microsoft is not a small company, right?
Just because their market share is smaller on the cloud computing, this is not. It's only a $1.63 billion contract. I mean, I don't say only like that's nothing, but to imagine that companies that size couldn't handle that is, so. They assume Amazon, but we'll see how it plays out. But still, the government hooking up with one of these companies, every time that happens, you always seem to get more trickle-down business.
Oh, I think it'd be smarter for the government to keep all their eggs in one basket in this case instead of going to other providers, and you should just keep it in one place, right?
I mean, in the days now when it seems like information gets stolen so easily, it doesn't matter what you do with it. I think the best thing to do is do what you think's best, because ultimately you're going to be the one answering to the public.
So maybe we should just go back to paper instead of cloud.
Yeah, I don't know. It should go to like imaginary marker, the invisible ink stuff.
Yeah.
Absolutely. Smoke signal, because that all goes away.
Exactly. It's right for a second.
Yeah. So whatever they think is the right move is probably the right move. From the Defense Department standpoint, they probably know defense better than I do. So I would say whatever their defense is, that defense rests. Zoetis used to be an arm of Pfizer, on their own for a while now. They're the biggest animal pharmaceutical companies in the world. They bought a diagnostic company, Abraxis, for $2 billion or $83 a share. On the day the deal was announced, Abraxis was trading for $71.75. This is going to help expand Zoetis' portfolio, as they now are the biggest in animal diagnostics as well, not just the actual pharmaceutical end of it. So Zoetis, a great company, one of the pharmaceutical companies that I'm always saying, like, you can't, when you talk best of breed, and we've done this before, I'm not going to get into it for too long, but like when it comes to the pharmaceutical companies, there's far too many of them at the top, and they don't really move around enough, like news-wise, newsworthy, big breaking wow to really pick it out and say like, oh yeah, I like Bristol Myers over Eli Lilly or Merck or whatever it happens to be. But when you move over in the segment and you think about medicine in a different way, and you think about animals and how many people care about their pets and farms now, and how many the legislation for how animals have to be treated and stuff, even on farms, and Zoetis runs that gamut. There's nobody else even close to pushing the kind of units that Zoetis does for animal health. I mean, when you talk best of breed, you can kind of remove yourself if you really wanted to from human pharmaceuticals and research and development in the medical field. And just move over to animals and look at a company that really has that market cornered, absolutely cornered. It is a solid company that returns ridiculous growth. Ridiculous. Love Zoetis. Tesla. You want to talk Tesla?
Yes, let's talk Tesla.
Again, we did an Instagram video on this. They halted production for 6 days at the Fremont facility. Assembly line productions are slowing things down. Are they going to meet 5,000 cars a week for the Model 3?
I have a prediction.
No.
Cash
flow positive in Q3 and Q4. They've said that. Yes.
Said that.
No. You think so?
No,
I don't think so either. So that's 10 days in total in 2018 that Fremont facility has been shut down because they had a bit of a backlog going on, pipeline issues earlier in I believe it was April. So they had 4 days shut down there, 6 days shut down here. They had 2 more executives leave this week, so that's 4 major executives that have left the company in the last 2 weeks. George Soros, major activist investor, did acquire $35 million in convertible bonds for Tesla. So that is a bit of a backing from a bigwig in the stock market industry. Goldman came out and said they believe Tesla needs potentially $10 billion in fresh capital by 2020 for the cost of their operations. We know they're burning through money like crazy. The new Model 3 that's going to be coming out in July, 310-mile range, 60 miles an hour in 4.5 seconds, 140 miles an hour it tops out at, 78,000. They say it's better than the BMW M3. It's faster and it handles better. It's big talk from a company that doesn't even can't keep their production running.
That is very, very, very big talk for that.
Speaking of blockchain, FedEx CEO Fred Smith. You know who Fred Smith is?
No.
Fred Smith is the CEO of FedEx. He's been the CEO of FedEx forever. He's the founder of FedEx. Fred Smith is the only guy that's ever run this company. He's made this company from a tiny little parcel company he started when he got out of college to Federal Express. This guy knows what he's talking about. Seasoned vet, ready to step down. Well aged now, but has been running this company phenomenally, but still sees the future, as Fred Smith calls blockchain technology, the next frontier. And FedEx is going to be testing using blockchain to track valuable cargo from now on, as blockchain finds its way into more and more segments of the economy. It's only a matter of time.
It should be everywhere.
Until we see that vast separation I've been talking about from what Bitcoin is to what it really brought to the table, which is blockchain technology. Sports gambling. This is a big one, right?
Yes.
This is, I mean, I think this is the way to go. It's been legalized, basically. So the Supreme Court ruled they could not impose basically on people's rights to gamble. The issue falls into the hands of Congress. If Congress chooses to not address the issue, then the issue becomes a state law. It's something that the states can monitor on their own. The federal government is not going to have a say in it. As of right now, we haven't heard anybody's really going to step in and interject, save for the states. We're hearing New Jersey might start gambling on the 28th of May already. The big concern is obviously, are they going to allow credit cards to be used? Because the gambling, I think, should be allowed. Major sports organizations are all in on this. The NFL, the NBA, they all want to get a cut. They think this is a good interactive way for people to get involved. I'm not a gambler. It's ridiculous, right? Like you could call me a gambler, I guess, if you want to look at the 5% spec in my portfolio. But I mean, like, other than that, I wouldn't bet on sports or a horse race to save your soul. But other people do, and they do in major ways, right? It's legal up here in Canada. We have gambling up here. But the big concern is the credit. Are they going to allow people to do this on credit cards? They don't up here. You have to have money in a bank account.
Yes, you do.
And you have to put the money from your bank account onto your betting account or whatever online. I imagine the same thing is going to happen in the United States, is they're not going to let people get so over leveraged, because you're going to have a bunch of reckless people who are basically going to be saying, oh, I'm going to be able to make it up, and they're just going to get so far extended that they're going to be up shit creek for the rest of their life.
Yeah, in my honest opinion, they should not allow credit cards in that, just like you said.
No. If you don't got the money, don't gamble, right? You got to have the capital, the liquidity to do it. I think that's fine. And I think gambling is fine. If you choose to do that, like if you choose to walk outside and smash yourself in the face with a brick, that's kind of your call. So like if you want to gamble away whatever you're working hard for,
use your money, not loan money.
Yeah, don't borrow money, because you're going to add to 100,000 or 100 million other people that are going to add up delinquency rates at MasterCard, American Express.
Everybody feels it then, right?
Everybody feels it then. But if you want to spend your own money, let's put your money back into the economy, because companies like FanDuel, MGM, Wynn, Boyd Gaming, Penn National, MSG, like Madison Square Garden, they're all going to benefit from this. They're all going to benefit from gaming being available, being profitable on a much more exponential level across the United States, where people love sports. ESPN's got its own streaming service now.
That's right.
People love sports. They love gambling on sports, right? It's Sunday. People don't sit on Sundays and prep podcasts and sit and talk about the stock market.
They drink beer and watch football.
Drink beer and watch football. Or in this time of year, they watch, I don't know, hockey playoffs or basketball playoffs or baseball.
Yeah.
Something's going on somewhere. But
on any channel,
I'm not watching it, but somebody is, and a lot of people are. And if the United States can find themselves building a new way to bring in capital through gambling, and people are going to gamble anyways. Why have them have to go to an Indian reserve and play a slot machine? If they want to bet on the Broncos and the Cowboys, let them do it. So, but don't let them do it with borrowed money.
No.
So sports gambling in the United States becoming a pretty hot button issue this week, and I would imagine you're going to see some mergers and acquisitions and changing of the chairs in the old musical chair game.
Yeah.
Things are going to start to move around as all of a sudden this marketplace opens up, and I would imagine there's
probably be a lot safer than like a back alley bookie you're doing your bets, huh?
Yeah, I don't do the back alley bookie anymore. That's not. I feed my money through the glory hole, and he gives me the tip.
Oh, nice, nice.
Then I know what to bet on. Apple Music. Tim Cook says they got 50 million plus subscribers. Spotify has 75 million. Not to mention that Apple's HomePod ranks 4th in smart speaker market behind the Echo at 43%, the Google Home at 26%, and Alibaba at 7.6%. The Apple HomePod is only 6% of the market share. They were tough. It was tough getting it to market to begin with for Apple.
Yeah, didn't they delay it a few times?
Yeah, they delayed it a few times trying to get it right, and Amazon really just took off with the Echo, as that was right on the money. People love that thing. Scott's Miracle Grow. You remember a couple of weeks ago, Bank of America Merrill Lynch downgraded Scott's Miracle Grow after their earnings call. Their earnings call wasn't very good. They've made some acquisitions recently of a hydroponics company, of a lighting company, one of the biggest lighting companies in the United States, Sunlight Supply. And we talked about how I think they're the best play in the medical marijuana or legalization industry by far. They're the fertilizer by default everybody's going to use. They're now the lighting rig supplier that everybody's going to use. It's not a matter of getting invested in the actual marijuana companies. I think this is probably your better play. SunTrust upgraded Scott's Miracle Grow this week, citing the acquisition of Sunlight Supply. And it was the best position, they said, for the legalization play. That's what I've been saying. So while Bank of America Merrill Lynch disagrees with me, they can sit on it because SunTrust agrees with me, and I think that's probably the best play too if you're looking to get into the marijuana sector. If that's where you're looking to put some money,
Scott's Miracle Grow.
Very speculative, but Scott's Miracle Grow, I think, covers a much more broad range of things than picking a specific company to be the winner.
Like Canan or something. Maybe you should look into Scott's Miracle Grow before you invest.
Because the thing is Aurora can pick up Medi Supply or whatever it was earlier this week or last week. And, I mean, there's Canopy out there, all these companies, they all use Scott's Miracle Grow.
I know. Yeah.
It doesn't matter what the company
those companies can fail, but Scott's Miracle Grow will always be there.
And it's in marketplaces that aren't marijuana. It's
exactly.
Just...
You can go to Walmart and get
my wife's
Scott's
outside right now planting something that's using Scott's Miracle Grow, my man. Verizon, the CEO, told CNBC, I watched this interview, it's really good, you should actually go on CNBC and watch it. It took like 15 minutes long about 5G network. It was great. They did it, I think, Wednesday. So go back to CNBC and check that out from last Wednesday. They're rolling out 5G, LA and Sacramento, the first 2 cities. 2 more cities to come, haven't announced them yet. Said he has no interest in acquiring any companies in a linear fashion, not looking to pick up any media companies. They're focused on 5G. They want to get this right. They think 5G is the future. He compared 3G, 4G, said he's been here since the first call made in Verizon in 1984. He said he's never seen anything like this. This is going to change the world. We talked about this on Instagram this week too. That's actually where I gleaned that off of, was that interview. He was in love with what the 5G opportunity is and what it's going to do for everything in the way the Internet of Things starts to talk to everything. And we get that on a much more mass scale. Verizon, very streamlined, focused on one thing. That's probably what you like from your favorite company.
That's right. I do.
That's what you like to see. Yeah, that's your favorite company. You're riding with them. They're stuck on 5G. They ain't worried about media. Yeah. So you got to like that. They got good focus on something that they think is going to be world-changing. Verizon's all in on it. AT&T plans to hit 500 markets, they say, with 5G by year-end. AT&T obviously wrapped up in a Department of Justice thing for Time Warner. They're working on all sorts of stuff, streaming stuff, DirecTV. AT&T is all streamlined. They're not streamlined. They're all over the place.
They are.
Whereas Verizon, and Verizon is the biggest smartphone, cell phone, data plan, whatever you want to call it, subscriber base, bigger than AT&T. So AT&T spread themselves out. Verizon really looking towards the future in that one market that they're really, really good at. So 2 companies definitely going in separate directions, it seems like, as far as the future goes. Companies that have been attached at the hip in the market for a very, very long time. KB Home, we've talked about some of the home builders. They've been doing really well. They've been making a lot of money. KB Home is repaying the entire $300 million of their 7.25 yield senior notes due June 15th. They've paid off some of their other stuff as they're paying down a bunch of debt. So they're not refinancing this note, not reissuing bonds. They're going to be paying the entirety of this off. There was some 13F filings this week.
There's a few of them.
There was. So let's go through some of the big ones. Berkshire Hathaway, they added to their Teva Pharmaceuticals stake. They almost doubled that. I think they actually maybe over doubled it. They added to Monsanto. They added to Apple, becoming the second largest shareholder of Apple. They closed out on IBM and GHC. George Soros added to Aetna, Baxter, and Thermo Fisher Scientific. Elliott Management, the biggest private equity firm or activist manager, whatever you want to call it, added to Windstream Holdings and exited entirely their NRG position. Pershing Square, run by Bill Ackman, added to his United Technologies position, exiting Nike, even though, like I said, Nike broke an all-time high this week, up 14% year to date. He also exited AIG and PayPal. Or no, that's Icon. I'm sorry. Pershing Square. The other thing about the Pershing Square thing is, while he added United Technology, Bill Ackman agreed with Third Point last week, where Third Point came out and said UDX should actually be broken up into three components, the three separate divisions that they actually run. And Bill Ackman came out this week and said, conglomerates don't really work nowadays. Companies kind of need to be streamlined. Like we're talking about AT&T and Verizon, right? Companies need to be streamlined. Bill Ackman said he thinks they should do that too. Bill Ackman's Pershing Square obviously buying into United Technologies. He wants them to split off into an aerospace company, a climate control company, and an elevator company, taking their three divisions completely separately, as opposed to being the big conglomerate that they are right
should
now.
Probably do split those.
Carl Icahn, who we talked about earlier in regards to the Xerox dropping out of the Fujifilm deal and having basically Icahn and his cronies and Darwin come in and take over. Icahn added Newell Brands, which is the parent company of Rubbermaid. So added that to his shares at his company. Goldman Sachs. Is Lloyd Blankfein retiring or not?
I don't know. There's a rumor this December.
Apparently they say that the decision was already made in March. Didn't he come out in March when this rumor first came out?
And he said he doesn't see himself retiring anytime soon.
He said it was, he thought of himself, I can't remember the reference, but something in regards to the way he was being mentioned, like posthumously almost, right? Like he was looking at it and like reading an obituary. He didn't know he was dead.
Kind of like that.
Right? Like, but apparently it's going to happen. Apparently in March, Goldman Sachs and Lloyd Blankfein had notified David Solomon, who's the likely successor. This is what New York Times is reporting. This would be a big change over at Goldman. Mm-hmm. I mean, Solomon's been there a long time, and he's obviously Blankfein's right-hand man. So, I mean, I don't imagine the transition would be ridiculously egregious in regards to the way that they run things, because we've heard Blankfein obviously talk about Solomon in really high regard, obviously, if the guy's his successor. But the question just remains, how do you replace a Wayne Gretzky? It's tough. You can be good. You can be really good at things, but Blankfein is really, really good at everything, it seems like. Goldman is a phenomenal company. Canan is a Bitcoin rig maker. They're filing for a $1 billion IPO over in Hong Kong. This would be the first time a Hong Kong crypto company has a IPO. This is apparently going to happen as soon as July. Do you think they're a little late to the dance?
A little late.
They're the rig makers, so they make the actual computers that help do the mining, but the cost of mining is going up per kilowatt hour. Mm-hmm. A lot of places are making any miners that move in make long-term commitments if they need to run any kind of new lines to wherever they're warehousing their rigs. The price of Bitcoin's going down. We've seen, was it Goldman that came out with that, or JP Morgan 4 or 5 weeks ago, where it said what the break-even point was for miners, and that we were like hovering right around it. I think it was like 8,000 or 9,000, right? But the actual break-even. So there's not a lot of money out there. I mean, I understand that you've got to do something probably with your company to raise some capital if you believe that this crypto thing's going to continue to go, but it seems a little late to the dance. It almost seems like all of the shine has rubbed off the cryptocurrency market, and it's just the same people toiling away just in some
there's
negative.
no big talk
They're
anymore.
just stuck in
it,
the same feedback loop, you know, just buying and selling the same nonsense. I don't know. Netflix on track for 86 original films in 2018. They had 61 last year, 86 this year, $8 billion in programming budget. They've got 33 so far that have been released in 2018 with 9 million views on average.
That's pretty good. 9 million.
I haven't seen Netflix original films. Are they any good? They have like stars.
I haven't watched Netflix in probably over a year now.
Yeah, I occasionally catch a documentary or something, but some of those are Netflix originals.
Yes, they are.
Yeah, some of the documentaries are Netflix. So my apologies. I do actually watch a little bit of Netflix and have watched some Netflix originals. Maybe some of those 33 are some films that I've enjoyed because I do catch occasional documentaries. I'm just not into the fiction.
I think the last thing I watched Netflix,
dealing with humans is fake enough. There's
There's
enough fake people. I don't need to spend another 3 hours watching more contrived nonsense. Kinder Morgan has been having a heck of a time with this Trans Mountain Pipeline. Alberta's been fighting with British Columbia, then Saskatchewan got involved, the Canadian federal government got involved, Trudeau's got involved, the Canadian government has said they're going to indemnify the project, the Trans Mountain Pipeline, against any unnecessary delays that are politically motivated. Kinder Morgan's given a May 35th deadline to get government assistance. The CEO, Steve Keen, came out after Trudeau said they were going to put this indemnity on there. And they said that was going to stay. Even if Kinder Morgan abandoned the project and another pipeline came in, this indemnity is going to remain, where they're going to stop any impediment, any political impediment from making the project go forward. But Steve Keen, the CEO of Kinder Morgan, says he appreciates the commitment from the government, but wants compensation for any kind of slowdowns or stoppages that happens for the shareholders. It's not a matter of you just helping us and saying you're going to allow it to happen. What if people start picketing it? What if there's issues? What if things get stopped or there's problems? We have shareholders to answer to. Kinder Morgan's got a May 31st deadline. It sounds like they might be willing to walk away from this Trans Mountain Pipeline after years and years of this nonsense.
Too long now.
Nonsense. Amazon's visited all 20 of the Headquarter 2 finalist cities. Headquarter 2 obviously going to drive in tons of jobs, billions of dollars. It's going to be, I would imagine, the epicenter for Amazon. Is they've got their original headquarters, but when you get to build something fancy and new and you go through this choosing process. They're basically on The Bachelor here, right?
That's right.
Like, they're out there looking for the rose and all that kind of stuff. Some of the major cities left out of the 20: Atlanta, Boston, Los Angeles, Dallas, Denver, Toronto, New York City, Pittsburgh, Philadelphia, Washington, D.C., and a few other ones in there. We're going to see what they decide, but I would imagine it's going to be marvelous.
Oh, it's going to be glorious.
Amazon's, they're encroaching on $1 trillion company here right now. They're going to make this something.
Yeah.
For sure. This is going to be something that stands the test of time, I would imagine, and not just be it's not just going to be a big square.
Yeah.
I would imagine they're going to make this something to go and actually take a look at. China and Toshiba have finally been able to agree that Toshiba can sell their chip unit for $18 billion. They've been looking to sell this. Finally, they got the agreement. Bain Consortium, the Bain Capital Consortium, a bunch of other companies from the United States, gonna pick up this chip unit, $18 billion. Toshiba plans to distribute the funds back to the shareholders because the shareholders have been waiting for this forever, and it's time to share a little bit of the wealth as they're finally being able to get this chip unit off the books. We'll see.
Yeah.
We'll see if Western Digital shows back up and makes another bitch about this. Because they were bitching for a long time, saying that SanDisk acquisition led them to owning some of the rights to some of the parts of the chips that they were trying to sell off. So we'll see if they peek their head in now that it seems like all the ink has maybe dried on this approval process. We'll see. YouTube Music launching this week after months of delays, $9.99 a month. YouTube Premium remains at $12 a month. All these companies seem to have music services. Eventually, this YouTube Music is going to take over for the Google Play Store. So, YouTube getting into everybody's in music, like we covered earlier. Apple's in it, Spotify. So many companies are diversified into the music stuff that it almost seems like if you're trying to pick, it's not really worth it just based on music. I don't know if there's enough money or enough content or people spend enough time focused on that. Yeah. It's small amounts that I can see people starting to pay over time just to be, like you pay this amount of money for this subscription every month and this amount of money for that subscription every month. And I can see it being a part of people's every month expenditures, like Sirius satellite radio used to be or something. but I don't see it as being a game changer, as it's spread far too thin across the whole industry. There's just so many companies that are in on this music thing now that, like, even Spotify with 75 million users, you look at that as a standalone. I know they've got Universal, Warner Brothers, Sony, they've got all the major labels signed, but I mean, you just look at it like, all you do is music. You just play other people's music.
Yeah.
So, like, yeah, okay, it's not for me.
No,
it just seems too simple for me. Dubai Aerospace came out this week. The CEO kind of let it slip while he was talking. They're in the process of potentially making an offer or making a purchase or a series of purchases that are going to accumulate to 400 single-aisle jets. So either Boeing or Airbus, or a combination of the both. Airbus's A320neos or Boeing 737 Maxes. Did you hear what I said? 400.
Yes, I did.
We're talking like $100 billion here.
Yeah, that's crazy.
This is going to be big money. So Dubai Aerospace, if he said that and that quote isn't off, that is a huge deal on the books. UTX, who we were talking about earlier, Bill Ackman, Pershing Square Capital, talking about UTX potentially breaking up into 3 separate companies, or they're pushing for it. UTX is selling their ice cream machine business.
I heard that, yeah.
Yeah, the ice cream making business that they have, they're selling to Middleby Corp for $1 billion. Not a bad deal. Good way to diversify there. Get rid of the ice cream business. Ice cream's only good around Christmas time. I know it's hot right now, but ice cream's not good right now. They don't have...
No?
Haagen-Dazs makes this pepper... Oh, you see how your face changed?
Oh, yeah. As soon as you said Haagen-Dazs, I was like, oh, yeah.
You see how your face changed? At Christmas time, Haagen-Dazs makes this... Because they're the meanest human beings in the world. They are cruel. Haagen-Dazs is a bunch of savages. They make this peppermint bark ice cream.
So good.
That only comes out at Christmas time, and then they discontinue it. Because they're a bunch of jerks.
And it's hard to find sometimes, too.
So you might as well sell off your ice cream making business. Because in the summertime, nothing's going to compare to the Christmas joy I get from Haagen-Dazs peppermint bark.
Yes.
We have crushed some of those.
So
delicious. Literally we have driven out of town.
Yes, across the city.
We drove out of town looking for that ice cream.
So good.
I might have an ice cream problem, my friend. PayPal purchases Sweden's iZettle, obviously another payment company, for $2.2 billion. Now they're in the in-store payment business, and not only are they in in-store, which they've had trouble getting in PayPal, but they're in the in-store payment business all over Europe now. Their presence is in tons of areas that Square's isn't, and this gives them definitely a leg up in their competitive battle with Square. We've heard that PayPal was potentially going to buy Square. That price would have been astronomical. This is a much better price, gives them a lot more headway in places that Square is nowhere near right now, as iZettle, again, all over Europe, and has the in-store payment stuff set up already, which PayPal's been having a really tough time for a lot of years trying to get into, actually being there, using PayPal on the Interact machine or whatever it is. iZettle gives them that foot in the door, not in the United States, but the foot in the door nonetheless. Microsoft is making an adaptive Xbox controller. I like talking about gaming. I don't play games. I don't know much about games, but I like talking about it because I know the gaming industry kicks ass. So adaptive Xbox controller for Windows 10 and the Xbox One. It's going to have 19 inputs for foot pedals and all sorts of stuff. You can plug your vibrator in, all sorts of stuff, I would imagine, right? Cybian machine plugged into that thing. $100, that's going on sale later this year, as Microsoft probably understands that, gamers nowadays need those programmable buttons. Everything needs to be one click, this something. Everybody's got certain dexterity they've developed, and I'm sure Microsoft has done some serious work on developing this to be a phenomenon, because they've never done this before.
No.
So to make a controller like this, I would imagine the R&D to come up with something that's going to fit in a gamer's hand with all those buttons is probably going to be immaculate. Microsoft kills it with Xbox, so they don't put out products just willy-nilly.
No, they don't. There's time for
as we talk about competitive gaming, Microsoft realizes that not only is their console a competitive gaming box, but they've got the ability to make the accessories as well, and they might as well get in on it, because somebody else is going to make third-party hardware, software that's going to be somewhat compatible with your stuff. You're either not going to allow them and you're not going to make it, and people are going to go elsewhere and use a different console, or you're going to get with the program. Microsoft understands competitive gaming. Get with the program. Last story of headlines. We know Ford's company over in China that makes the interiors for the F-150. It burned down in Michigan last week. It burned to the ground. And now Ford F-150s have 76 days of inventory. It takes 76 days to sell a Ford F-150. Ford got the plant, or got at least the interiors being made again. So the plants are coming back up. I believe the Dearborn plant came back up on Friday. And I believe the other F-150 plant that was down, I want to say maybe Kentucky, is coming back on Monday. But they do expect a 12 to 14 cent EPS hit in the second quarter when they release earnings, because it does affect things. It's going to affect the actual inventory of the F-150s, best-selling truck in the United States. So that's a big thing, right? So I don't know where they're actually getting their stuff from. They didn't rebuild the plant in a week, did they?
No.
That would be really expedient. Do you think they hired some aliens or something?
Wizards.
That's probably more plausible than aliens, because aliens are always like busting out of your chest, right?
Yeah, exactly.
They don't really seem like, they don't have the opposable thumbs to do building.
No.
Wizards wave the wand.
Exactly.
They come out of the little lantern. They rub the genie lantern. Yeah. Earnings. Do you like earnings? We're on an earnings season.
I'm sad about
It's
that.
baseball season, not earnings season.
I prefer earnings
It's
season.
barbecue season, my friend.
I prefer that too.
I bought a barbecue yesterday. It's barbecue season. It's going to be barbecue season starting tomorrow night. Yeah, exactly.
Yeah.
I'm gonna get out there and chef it up. Keto, right?
Yeah. A lot of meat.
Yeah, all I'm eating is meat. Getting lean and eating meat. It's not bad. Home Depot reported earnings, ticker symbol HD, $2.08, beat by 2 cents. Revenues of $24.95 billion, missed by $270 million, but up 4.4% year over year. They closed the week 187.42. Now, they had a late start to the spring, they said. 2.2% comparable store growth in April was a weather anomaly due to some late snow. So they're really chalking a lot of these misses up to that. 4.2% comparable sales growth across the quarter. SG&A expenses, though, up 90 basis points to 19.2%. Operating margin down 40 basis points to 13.6%, having a little cost efficiency problem as well, too. A little bit of got to get in there and micromanage those costs a little bit. Customer transactions also down 1.3%. So while they've got a track record of being a solid company, we know they don't have any competitors. Lumber costs obviously going up. Cost of everything going up. Home Depot has the credibility to come out on one earnings call and say this is an anomaly related to this, and people chalk that up as, yeah, they're probably right. So don't expect Home Depot to get smashed off of what is a fairly tepid quarter. But if this continues, I would look for any of these numbers that are starting to tick in the wrong direction to be a trend, as a lot of prices that do impact Home Depot start to creep up. And it's not a matter of maybe competition creeping up on them, it's just a matter of the actual marketplace creeping up on them. John Deere in the same boat. Ticker symbol DE, EPS of $3.14. It missed by 19 cents. John Deere missing analyst estimates. Revenues of $9.75 billion, missed by 80 million. So again, missed analysts. And the thing with the rev number, though, that doesn't bother me is it's up 34.3% year over year. So we know Deere's still doing lots of transactions. Closed the week 155.25. Worldwide net sales up 29%. The agriculture and turf division up 22%. Construction and forestry up 84%. Bad margins are affecting the agricultural and turf division, though. They said that on the conference call. Equipment sales up 14%. They cut costs and raise prices. Because when you're the only game in town, because you're John Deere, I guess you can at least raise the prices. Cutting the costs may be a little more difficult. That's you going in and actually trimming the fat yourself.
Yeah.
But you can always just tick up that sticker. And just,
exactly.
right?
Yeah.
What are you going to do? You're buying my tractor. The cost of sales, though, has increased significantly at Deere, as the cost to make a sale is up 35%. So really? John Deere, again, like Home Depot, needs to watch the costs, as they might be starting to get a little out of hand. Hence the reason they're cutting costs and raising prices. Tencent. Do you know who Tencent is?
I do know who Tencent is.
They are the major competitor to Alibaba over in China, another government-subsidized company that's got their hands in absolutely everything. We talked earlier about companies not be a conglomerate. Well, Tencent definitely in autonomous vehicles and video gaming and all sorts of electronics. And So net profit up 61% for Tencent. I'm not doing a Chinese conversion for all their EPS and all that kind of stuff.
Okay,
You go out and do that on your own in yen. Revenue up 48%. So right there, I'm going to stop you. Revenue up 48%. Major competitor of Alibaba, who has revenue up over 50% 8 straight quarters. Just saying. 8 straight quarters over 50% for Alibaba, the main competitor of Tencent. Tencent can't even crack 50% this quarter when online gaming and smartphone gaming is up significantly, well over 60 and 70% respectively. Other business up 110%. Who knows what other business is? That's up 110%.
I know they're the 5th largest internet company in the world.
Other business, I assume, is like one guy one quarter picked up a nickel off the ground, and then one guy the next quarter, he found a loonie or a dollar, and it jumped exponentially. So the growth of the lost and found, I imagine, is other business. Operating margin up 42%, online ad business up 55%, social networks up 57%, Tencent, Clash of Clans, League of Legends,
Clash Royale,
Fortnite. So you're
huge
playing
games.
Huge games. Tencent, right? I know studios. You know the names of the studios that make the games. Tencent, though, the parent company of those studios, major company in China, great company. Them and Alibaba making waves around the world. But again, just when you're comparing apples and apples, 48% revenue growth this quarter for Tencent. Plus 50%, 8 straight quarters for Alibaba. Jack Ma, Alibaba still probably the better play. But Tencent, you might find better value in it, as Alibaba definitely the more well-known company out there. So much more international investing in Alibaba than you do in Tencent. Macy's, they really shook up the market.
Did they?
They did. They had every apparel company, every retail company moving upwards. They released earnings and it sent the market into a frenzy.
So this is a retail that's doing good.
Retail. Macy's was killing it. Their earnings call was great and it sent everybody flying. And JCPenney and Nordstrom and stuff brought everybody back down to earth the next day as everything was garbage with them. Everything came back down to earth.
That's why I was amazed.
But Macy's doing a heck of a job. 42 cents, beat by 7. Revenue of $5.54 billion, beat by $150 million, up only 3.6% year over year. But margins are tight at retail. Right now, $33.96 a share. Owned and licensed comparable store sales up 4.2%. Operating income was 4.3% of sales versus 4.1% of sales year over year. So they've increased 0.2% is their operating income from sales. So when you've got very small margins in a retail environment, you need to find every penny you can. So that loony in the lost and found, that goes into EPS.
For sure it does, right?
You go and get that. Take-Two Interactive, that's TTWO, ticker symbol, EPS 77 cents, missed by 19 cents. This kind of shook up the market too a little bit. Revenues of $450 million, beat by $5.74 million, but down 21.2% year over year. Recurring spending plus 42%, and that makes up 44% of total revenue, and most of that is from Grand Theft Auto. This stock was down significantly going into earnings, and then after earnings was reported, and the next day it bounced back because people are expecting good things out of Borderlands 3 and the much delayed Red Dead Redemption 2. Yes. If that ever actually gets to market. So Take-Two Interactive has a lot of favorable tailwind. There's a lot of stuff pushing them into the future that people are looking forward to, but as of right now, a lot of money being spent on GTA and not a lot of growth otherwise at Take-Two Interactive. Walmart, they purchased Flipkart last week.
They did,
They did. And Google bought into that a little bit, trying to compete with Amazon overseas in the Middle East market. Walmart ticker symbol WMT, EPS of $1.14, beat by a penny. Revenue of a very paltry $122.7 billion. I mean, scoff at that number, my friend. I'll have none of that. Beat by $2.19 billion, up 4.4% year over year. E-commerce sales continue to grow exponentially at Walmart, up 33%. Comparable store sales up 2.3% in the U.S. Sam's Club comparable store sales in the U.S. up 3.8%. I think Sam's Club's only in the U.S. International sales grow 12%. Walmart strong. Competition is closing in fast. I heard a thing where Amazon sales in the United States are going to be comparable to Walmart sales
in 2021.
Yeah, 2021,
yeah.
Right? It's very, very close. Now, this is analysts expecting. I think it was 2021 or 2022. They didn't give it like a definitive whatever, but still, we see Amazon growing at an exponential clip, and we see Walmart doing really well, but it's probably going to take the acquisition of companies like Flipkart to really help push them over the top. Walmart, I think, making the right moves. The final earnings call of the week, and which is sad, because I'm only going to see you at the gym and during cardio and during everything else we do.
That's right.
We're not going to sit across this table.
No,
this table's weird. This room wasn't as hot as I thought it was going to be.
No, last time we were down here it was hot.
It was really hot, right?
Painting this room was hot.
Painting this room was hot.
Yes.
Yeah, I'm amazed the paint isn't peeling off these walls. It's
Yeah,
not near as hot as it is outside.
It's hot outside, but it's cool in here, which is weird.
Yeah, it's strange because in the wintertime, this room gets cooking.
Sauna.
It's a sauna in here. Cisco, CSCO, ticker symbol EPS of 66 cents, beat the street by a penny. Revenues at $12.46 billion, beat by $20 million, up 4.4% year over year. Closed the week at $43.21. Recurring revenue is 32% of total revenue, and that's up 2% from last year. So the business they do, people like it, and they keep doing business with them, but they're not gaining as much business as they'd like. Obviously, they'd like to get that Pentagon contract for the cloud computing. Product up 4.7%, service up 3.4%, security up 11%, infrastructure platforms up 2%, applications up 19%. And when I looked at this, I assumed, because all those other numbers are up, I assumed that I was able, without looking into the earnings or really breaking down these segments further, I thought just by looking and using my my brain, I was going to be able to deduce what this was. Other was down 6%. And I assumed other meant they were kicking babies, and they're kicking 6% less babies. Good for them. Good Cisco with a good earnings call. Good earnings this week. Good podcast this week.
I agree.
It was a pleasure being here with you.
It's always a pleasure.
I have a hell of a time doing this. This is a dog and pony show we're running here, eh?
I look forward to every Sunday.
It's fun.
It is fun.
We're having a good time. We hope you guys enjoyed it. That was This Week on Wall Street, brought to you by Wall Street Breakdown. You can check us out on Instagram, check us out on YouTube, check us out, just check us out, bro. We walk around West Edmonton Mall, flex for you, do whatever you want. You guys have an outstanding week. We will see you again next Sunday. It was a pleasure being here with you, if any of you were actually here. But if you weren't, I had a good time with Anthony. We'll check you next week.